Hi, this is Joe Rabil with Rabil Stock Research. So we're going to get right into the S&P. I'm going to use the spider chart and on a daily to show you what's taking place here. I think we have to recognize when a market is surging versus a sequential wave. And believe it or not, the S&P is still in a sequential wave based on how I do it. I want to show you how I'm looking at this channel and what would happen if we break out of it in either direction. So we're going to cover that. Then we're going to look at the QQQ and the IWM, see what's actually taking place there, and then we'll go through the stock requests that came through this week. Let's go ahead and get going now. Okay, so I'm looking at a daily chart of the SPY, and I've got my moving averages on here because I want to show I've drawn in a channel line. After the initial surge of the move off the low, we've been moving in what I'd call a sequential wave pattern. All right, sequential wave is when we make higher highs and higher lows without getting too far away from the 18. We're not accelerating. So there's two versions of this, a surging market phase and a sequential wave pattern. All right. Sequential wave is when we work our way up and we do it in a rather orderly fashion, exactly like what's taking place here. You see how we're not getting too far away from this moving average as we move to the upside. If we got a surge, we would move up like this and we would break away from the channel, and we would actually have to make a alteration to the channel and accelerate it to the upside. Since this started sideways here, since this started working up after the initial thrust, we actually have not altered the trend line. It has stayed the same. When we alter the trend line away from the 18, that's when we know we're moving into a surging market. So what it would look like is we've got a pattern like this, and then we would make a higher low and then another higher low above the 18, where we're creating a higher pivot low stretched away from the 18 and getting farther and farther away. When that happens, we know we've moved into a surging market and that you're going to have to tighten things up if you're trailing a stop, and or if you're looking to make entries, you're going to have to be a lot more nimble to do it. All right. Right now, we're in okay shape. Basically, if this were to break through the 650 level, then we're moving into what I almost call like a climatic phase, where we're moving up and getting a little bit more climatic. Now, one of the other things I want to mention is we look at the MACD and the ADX, especially the ADX line. Look at what's taken place. Green DI has made a move here. We tried to crisscross, and then green got right back above, and is now breaking to above the red again and above the prior two peaks. So this is in really good shape when we look at it from that standpoint. I'm pretty much encouraged by this overall pattern. Now, what I'll say is that I would be looking for individual stocks. I wouldn't be playing this index. Why? Because as we look at so many individual stocks, they're actually setting up in a way that are providing pullbacks. They have really good momentum characteristics on their weekly charts, and they're providing a pullback. That is what I would be focusing in on. It's definitely what I would spend some time looking for. Now, some of you might be asking why I'm looking at a daily chart when my main chart is typically a weekly. Well, the reason is that the daily chart has been in control. And when I say in control, what I'm saying is once we recovered the 18-day and we had a test of it here, and then another test of it not long after that in early June, and then another test in later in June, and then another test in July, we know that this is the this is the time frame that's in control. Even though we broke below this, we recovered it the next day, and now we have to assume that this line is still in command. It's still holding the trend. All right, this is the trend right now. And as long as it stays above the 18-day, we have to accept that we're in an uptrend or the bias is to the upside. All right. So I'm not really focused on the 18-week. The price is too far away and it's not testing it. So we have to use this line to tell us what's going on right now. Once we officially break the 18-day, an official break of that line would be a break. Now that we've gone to new high, we're going to need to come down and like a close below the 18-day and then take out the low of that bar. Now, we did that here, but we did it for about 30 seconds. I mean, it was an early morning. If you go down to a 10-minute chart on this time frame, it did it very, very early via gap and then turned right away. It wasn't really what I would consider to be a convincing signal whatsoever. So unless you had a sell signal on the move below that, which I would never do, I'm using this as a condition, not as a sell signal. It's more of a condition. So we're looking for the condition where we actually break the 18. What that means is we'd have to close below it and then take out the low of that bar. And I'd like to see it doesn't have to close below it, but it needs to be down there for more than 30 minutes. It can't just come down really quickly and then turn right back up, which is what I describe to my subscribers. Tell them, I mean, we can't just do it really quickly. It's got to have a little bit more time associated with the drop. So that's how I would look at it. We haven't done that yet. If we do, then we have to respect the break of the 18, because what that means is if I switch this to other time frames, we've got some room. We've got what I'm calling an air pocket between the 18-day and the 18-week. We're all the way down around 600 at the 18-week, and we're way up here in the 650, 640 area on the 18-day. So we need to be on watch for the daily to break. If it does, then I think we have an air pocket down to the next support level, which would be the 18-week. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. My comments are for educational purposes only. Please do your own due diligence before making any investments. All right, let's look at, so I want to finish up one thought on the spider, because what I was showing you before was more educational in its meaning, and this is also educational, but I'm in my analysis mode, and when I get to that, I also want to make sure you understand, we've made a marginal new high. We haven't followed through from that yet. If we were to come back down through this peak here and have failure very quickly, and I would say failure would look, you would see it on the weekly chart. It would probably need to turn red on the weekly chart in the next day and a half, today and Friday. And if we were to do that, then I would say that that's a pretty big negative in the way that it's playing out, and that we still could be in position to break that 18. In fact, if that were to happen, we might end up breaking the 18. But I'm just telling you, like, we're not out of the woods yet. We still are in a sequential wave that's working, but we can also break that 18. Okay, it doesn't have to be a surging market that follows. It could just break it. So just want to make sure you understand that it's not all systems go. But on individual stocks, there are some great looking patterns out there. All right, let's move on to the QQQ. Very similar situation taking place. We have merged above the prior high. We've made a new high, taking out this red bar, and we're getting some follow through. But it is turning red this morning. I still think there's a pretty high probability we oscillate in this area, as opposed to breaking down violently or breaking up to the upside and surging. I think we could just oscillate around here. It doesn't have to do anything magnificent, but what that allows is for the individual stocks to show, real glimmers of movement, like strong moves, and ones that you can really play and take advantage of. All right. You just have to understand the volatility component of your stocks and make sure you're giving them enough room to participate. Now, one of the reasons why I'm getting warming up a little bit is what's taking place on the IWM. And let's just look at this for a minute. So we've got a pretty good sized green bar taking place on the weekly. And look at what's taking place with the relative strength. The relative strength is actually moving in unison with this. It's showing a little bit of confirmation on this week. So we want to see that. I think that's encouraging. Now, it still has some work to do. It needs to get above the moving average and turn that moving average to the upside. But notice we have formed an RSI buy since it came and broke down. It had not happened. We'd seen that in some other indexes, but not in the IWM. So that is an encouraging sign that it's taking place. It's encouraging that we're breaking out to another new high. We're above all the moving averages. We're above an 18-month line, above an 18-week line, above the 18-day line. Those are all positives. MACD has now turned up on the daily above its signal line, and it's above the zero line. We're also above the zero line and the signal line on the weekly. Now, on the monthly chart, we're trying to get above. It is right at it. Hasn't quite cleared it yet, but we're getting that on the 2 shorter term time frames. So some signs of encouragement, mostly watching this RS and the RSI. I thought it was worth noting. If we get some follow through and we continue to see outperformance. So today the QQQ is up 0.3%. This index is up over 1%. All right, we want to see that. Why? Because what's going to happen is the highlights that I show for my subscribers each week is going to expand into new names. If you're going through a specific list of stocks, say 500 or 1,000 stocks, and you're putting out and you're looking at the exact same ones that look attractive, and you're not seeing new expansion, then the market's not. It's not as healthy as you think it is. We need to see new stocks expanding so that next week we're saying, "Wow, I just found 3 or 4 new stocks that weren't positive last week, and now they have turned into something more positive." That's how you get a really bullish environment. We haven't seen that quite. I mean, we've been seeing it over the last few months. It's started to improve, but it'll go crazy improvement if we get this IWM kicking in. So that's why I spend so much time looking at it. All right, we've got a number of people who sent in requests. So let's just look at this. Now, this is really interesting as we talk about this. Now, one thing I didn't say on the spider that I want to make sure you understand is that on this time frame, it is a surging market, right? It's surging away. It's not checking back to the 18 on an orderly, quickly basis. It's just surging away. So we do have a surging market on this time frame, all right? But on the daily chart, look at what's taking place. Pullback holds, pullback holds. We keep pulling back and we keep forming a sequential wave pattern. It is not going crazy above the 18. It's just pulling, it's moving up, and when it gets too far away, it pulls back, does it again, does it again. Will it do it here, or will it go to a point where it goes to a surging market phase? I don't know. But when we do know, here's what you're going to look for. Here's the 18, and here's your price, all right? If you keep coming back, you're fine. But if you make a pivot above the 18, God, I'm having trouble with this. If you make a pivot above the 18, then you know you're altering the trend line. You're accelerating the trend line, and we're going into a surging market. So that's what so you can call it a surging market phase or an accelerated market phase, either one. And that's how you know if we have that. I wanted to make sure I covered that. But that's sort of what's taking place here. So you need to play this off the daily chart right now. You can't really play it off the bigger time frames at this point. Now, if we go through a longer correction, you could play it off the weekly, off the monthly, and into the weekly. Right now, you kind of have to play it off the daily and be a little bit more nimble. All right, BABA, look at what's taking place here. Look at this monthly chart. Look at the way this is cupping around. This is a good, I'm glad someone brought this up. I mean, look at the volume that came in, and now we're going through this consolidation. Started out a little bit rough, but it's worked its way around, starting to look a little bit more attractive. I think this is a very interesting pattern. All right, BMR. The question here was where was support on this? And in reality, I mean, this is sort of a crazy volatile mover. I would probably go down to an hourly chart so I could see what's really taking place. You can see what's happening here. We've had this big turnaround and it's cupped around. Support on this is really, let me look at this crosshair. So we've got some support at around 52. I would say the low that was made here around 56 is pretty key, pretty pivotal. But the volatility of this sort of tells me it's probably around 50, 51. If we're going to turn down and truly pull back, let me make sure I switch this back to a daily chart. I think the 50, 51 level is what I would be watching for. Now, because this is so volatile, it could just rip through all that and come back to the moving average. So we just want to see how it reacts, how it does it, how it pulls back is highly important on that. But not my cup of tea because of the way this formed this big U-turn here. There's a lot of resistance coming up here. So you did a really good job of exiting this. I know you exited this almost near the highs, I think, and now it's probably pulling back. I would be watching it for the 50 level first. All right, CRWD. So let's just stay on our theme here. We've got a good trend. We kind of tried to make a move. We come up to this big round number and then pull back. I mean, this has been a pretty good stock, but it didn't get the ADX to cross above the 25 mark. You see how we couldn't get above that, even though it made a new high here? So I was giving warning signals to my clients on this who owned it and said, look, this is not what you're looking for. This is not confirming on this move. All right. We were confirming it back here, but we didn't confirm it here. So we've got to be on the lookout for a sign of reversal. Now, here's what's interesting. If we stay with our theme, look at how this was a sequential wave pulling back to the 18 each time beautifully, but then it just turned into a break. It didn't accelerate away or anything like that. It clearly had the big red bar break. Now look at what's happening. It's a sequential wave to the downside. Look at how it's failing, not getting too far away. Now we're looking for either a big green bar coming up through or some kind of climax to the downside. We're going to need some more, because of what's taking place with the ADX and the MACD, we're going to need a lot more confirmation than a simple 18 break. All right, we're going to need more complex reversal to get this looking better, in my opinion. All right, let's look at Hilton. Hilton's a great looking stock. It has made a pretty substantial move off the original kind of turn. So here was the big base down here, kind of erratic in the way that it formed, but we moved up. This was really nice here where it formed and broke out in late 2023. And now we formed this big higher low. I just think the way that it's playing, I would probably be more interested in playing this off the weekly and using the daily as my trigger and my timing, right? So that's probably the way I'd be looking at this, but really attractive pattern. Watch for the trend line break. And then you could play it off the trend line break, but we want to see some strength because red has been above. So as long as we get strength through maybe like the 275 area, taking the trend line out, I think I'd be pretty interested in that one. All right, PLTR. So I think this is another one that's kind of interesting. We haven't pulled back to the 18-week in quite a while, but we've been doing it over and over again on the daily, and we've really come down, but haven't truly broke it. And the line has remained rising throughout. But look at how now it's sort of surging. You see how we weren't getting that far away from it through all of these, even though this looked like it was going nuts to the upside on the monthly chart. Really big surging chart stock on this time frame, but on this time frame, it was just coming back to the 18. It never got kind of crazy until now. Now it's finally doing that. If we were to like go up to 200 now, I would say that this is probably, a stock that's probably forming some kind of a climax finally. The other thing you can look for in these situations is you notice the size of the bars. This is the biggest bar this has had since this last run. So I would be looking for some type of a reversal or probably be taking some profits in this if I'm in it. Now, it doesn't mean that it's reversing and going to start a big downtrend. It just means we could start some type of a correction that could be pretty meaningful in this stock. All right, HOOD. Another one that has had a really nice move. I think it needs a little bit more time here to set itself up. I think it's going to have to hold the 18-day. It has been holding the 18-day. It hasn't quite touched down on it, right? But we tried to break out, and then we have the potential for failure here. But the ADX is still above the 25 mark. So if this can turn back above and form a higher low above the 18, I guess I'd be okay with it. But I'd feel like I need to be nimble just based on how extended it is above the monthly chart and above the weekly chart. So be careful there. Root is really kind of struggling off that earnings number, right? I mean, a nasty breakdown. And so let's just look at this on the daily chart. We've got MACD confirming, hitting a lower low with price. So that's confirmation. There's no diversions there or anything like that. Red DI, which is the strength of the sellers, broke out to a new high. You see how it took out all the highs of the red DI? So that's also confirming this down move. So yeah, we could get a rally to 100, maybe above that a little bit, but we're rallying into resistance right now. We're not really in a position to reverse the trend. Now, yeah, we are coming back to the 18-month line. So I would expect some support to potentially show up, but that doesn't mean it's a buy. Again, unless you're a trader and you want to trade it up to 100 or something like that. If you're going to do that, you probably need to be down on a 15-minute chart, 10-minute chart, something like that. Maybe an hourly will do the trick, but I don't know. I'm not sure about that. If you got a pullback on the hourly, then maybe you could play it, but I don't know. I think you're going to have to be on a really small time frame and playing it from a much more aggressive standpoint. Thanks for joining me today. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn some more about some of these techniques, you can go to my YouTube channel. Have a great week, and we'll see you next time.